Hello, everyone. My name is Nicholas Hamasevich. I'm the Director of Research and Academic Affairs here at the Korea Economic Institute. Thank you all for coming. It is my pleasure to welcome you to KEI for our academic paper series event today on the problem of debt in South Korea and its impact on South Korea's economy. With the competitiveness in Northeast Asia and the centrality of economics in the Asia Pacific, the strength of a country's domestic economy is important. And for a country like South Korea, it needs its economy to grow in order to help facilitate the growth of its country and to keep it competitive in the global market. The South Korean government has to face some important issues that will challenge its economy and its ability to grow. We talked about one of those issues, demographics, last year in our academic paper series. This year, we're examining the concern about the rising debt level in Korea. Korea has one of the highest debt levels of any OECD country, and the Bank of Korea governor recently mentioned this debt problem as well. So we're excited to have with us today Dr. Jung-Sung Kim from Bryant University in Rhode Island to talk to us about these issues here today. You have a draft of his paper in front of you to peruse. His final report should be coming out later this week, so please wait for that and just see that draft as a draft. And today we'll get Dr. Kim's thoughts on this debt problem in Korea and what it might mean for its economy. So you can quote from his presentation in our conversation here today. Dr. Jung-Sung Kim is a professor of economics at Bryant University. And earlier this year, he spent some time with the Korea Development Institute, KDI, as a visiting fellow. Dr. Kim has taught courses at Loyola College in Maryland and Johns Hopkins University. He is the author of the book Labor Supply and Occupational Structure of Asian Immigrants in the U.S. Labor Market. And Dr. Kim has his MA and BA in economics from Kyunghee University and his PhD from Johns Hopkins University. Please join me in welcoming Dr. Jung-Sung Kim.
Good afternoon. My name is Jung-Sung Kim, and thank you for coming to this talk. Before speaking, I want to thank for the Korea Economic Institute of America for having me this place. And I especially thank Mr. Nicholas Hamasevich and also Congressman Manzullo and them for arranging all this wonderful event. Today's talk is about the household debt in Korea. And this is a huge topic because household debt is closely related to savings and also its implication on the economic growth potential and all that. So since I have 45 minutes, and I will go over what I prepared, and then I will be happy to speak with you the second part of the 45 minutes. And also, my train to Providence is 4 p.m., so I have plenty of time after the talk. So I'll be happy to speak with you, and then if any question arises. Okay. So first, let me clarify some definitions, because there are some confusions. In general, household debt is referred to as 가계부채. That is 부채 literal translation. But this statistic is kept by Bank of Korea, and the Bank of Korea has two lines of statistics. And the first definition is household credit, in Korean 가계신용. And this is the officially used. Okay, in all in related papers, they use household credit to describe household debt. So household credit is the sum of household loans and the purchases on credit. And household includes everybody. So the amount of household credit to describing household debt reached 963.8 trillion won in 2012, and which is approximately $850 billion at this exchange rate. And also, the second line of definition of household debt is what we call individual financial debt, and in Korean, 개인 금융부채. And this term is a little misleading because it has term individual. So people may think that this is only about individual. But actually, and the second line of definition, individual financial debt, is a broader concept than household credit because the second definition includes everything in household credit and also includes debt incurred by the self-employed and the nonprofit, even nonprofit organizations in addition to household debt. So according to second definition, and it's approximately $1,158 trillion, which is slightly greater than $1 trillion US. So in this paper, and every time I refer to household debt, and I'm talking about household credit, the first definition. And also in the later part of this presentation, and we are going to use this term, LTV and DTI, for the real estate market. And LTV stands for loan to value ratio, and the percentage of a consumer's monthly gross income that goes toward paying debts. So in Korea, the policy-wise, LTV is between 50% and 60%, depending on where you live, where one lives, whether this is Seoul metropolitan area or some other parts. And DTI stands for debt to income ratio of a loan to the value of an asset purchased. So if you make $1,000 and then you pay $500 as the principal payment or interest, and then debt to income ratio is 50% or 0.5. Okay, and having defined all these important terms, and let me just describe Korea just a little bit. So briefly, well, this is Korean case, and even though household debt sounds like a financial issue, and it's much deeper than just a finance. So as you know, Korea is a small country, but it has 50 million population as of 2012. And GDP per capita is $23,000, and household income is approximately $3,700, and household expenditure is about $3,000. And so this information appeared in blue fonts directly related to this paper. So household debt as of 2012 is this number. I presented this number in the previous slide. And total household is 17,000. So this number. So average household debt is approximately $46,000, so which is not a small number. And I'm going to talk about labor market briefly, and because of the how to address this problem fundamentally. So unemployment rate as of 2013 May, most recently, is 3%. And this is not a bad number. And also employment rate as of May is 60.4%. And these numbers are a pretty good number. But the problem is the nature of this employment. So will that be 정규직, full-time, and with the benefits, or temporary, or the short-term, the employment structure? So the numbers are very misleading in some cases. So CPI growth rate, capturing inflation, is 1.3%, good number. And life expectancy, well, this is pretty good, and 81.2 years. And this is also important because Korea is the one of the fastest growing, aging economy in the world. So in about a generation, and Korea will be probably number one or number two, most the old, what do you call it, aging society in the world. And percent of a population over 65 is already 13%, 12%. And gross domestic product as of 2011, and this is the most recent statistic as of April 15th from World Bank. So I couldn't find the number 2012. And Korea's GDP is over $1.1 trillion, and then the ranking is 15th. And I think this is not a bad performance for a country which was pretty much annihilated after Korean War, which is only 60 years ago. So on surface, it's doing pretty good, and it's doing well. And also, and here is the brief, the glance for GDP and growth rate. So things happen. So for example, after Asian financial crisis, and Korean economy hit really hard. But overall, and it's doing fine, so GDP is growing. And now, this is the trends of household debt in Korea. So I have the 3 lines of information. So this bar is describing household debt in trillion won. And also this red the trend is the growth rate of household debt. So, so 2003 is the kind of, well, it's not a threshold, but a big dip. 28.5% dropped to 1.6%. So what happened in 2003 is the what we call credit card crisis. So after the Asian financial crisis, and things were really bad, and the economy was stagnating. So government wanted to stimulate the economy and by the stimulating consumption. So in an effort to stimulate consumption, and the government relaxed heavily the rules on credit card issue, the requirements. So I heard as of 1998, and that the number of credit cards available in Korea was 40 million. But in about 2 years, after 2 years, and it's doubled, and it became almost 90 million. So that was a big increase. So, and then because of this relaxation on credit card use, and then many people use the credit card and to incur debts. So because of insolvency problem, and a huge the crisis occurred around this time, and the government wanted to correct the problem and then by strengthen the requirements. So that's why we have this dip. But overall, and this is pretty stable, okay, stable around 9%. So much stable, much more stable than 20-some percent. So that's the trend of household debt in Korea. Well, Nicholas suggested, and because we are talking about that from U.S. perspective in some way, so I included a couple of slides for American household debt, just for comparison. So I checked the New York Federal Reserve data several days ago, and the U.S. household debt fell to $11.2 trillion in the first quarter of 2013, and compared with a peak of $12.7 trillion in 2008. So it's a good news, and we reached the peak in 2008, but it has been declining. And obviously, mortgage debt led the decline, falling to $7.93 trillion. And total student debt rose to $966 billion. And going to school is really expensive these days. In the private schools, $40,000, $50,000. So also, I have comparison between Korean case that I presented 2 slides ago, and that's a U.S. case. So in the U.S. case, and it reached the peak in 2008, third quarter, and it's been declining. Okay, so that's a good news. So that's U.S. household debt. Okay, so let me just give the few more lines of explanation for trends. So although the growth rate of the debt declined from 11.8% in 2006 to 5.2% in 2012, so 2012 number, okay, the growth rate is 5.2%, which is much lower than 11.8% in 2006. But this is only about the growth rate. But then the total amount of household debt has increased 58.7% since 2006. So it reached a level, and many people think it's problematic. And Nicholas, well, so first I presented this number. So from 2000 to 2012, average rate is 12.1%. And one of the comments from Nicholas was then why do I focus from 2000 and including all these outliers? So if I just focus on 2003, not excluding these numbers, and the average is only 7.6%, and nominal GDP growth during this term was 7.5%. So number is very different. But if I include the earlier 3 more years before 2000, so Asian financial crisis hit the Korean economy in 1997. So if I include and the 3 more years, and from 1997 to 2012 is 11.3%. So when we focus a certain period, there's got to be a reason. It's a 2000 or after a certain event. So either way, and if I focus on 2000, and then that's 12.1%. If I include all these years from Asian financial crisis, and that's 11.3%. But anyway, and I think this is very important. And no matter what happened to growth rate, and the level of debt and increased to 58.7% in the last 5 years. So that's the share of household debt to disposable income. So share of debt to disposable income reached 136%. So it's been increasing ever since 2004. So which is also the create pessimism. So now, when we break down the number, as of 2012, the household debt was 963.8 trillion won. And within this number, and household loan is approximately $900 trillion, and purchase on credit is around $60 trillion. Okay, and I didn't include any trend, but purchase on credit is much smaller than household loans because household loans usually includes the mortgage loan. So even though this number is pretty much smaller than this number, and the trend of rise is much faster. So people like their credit cards. People like to buy things on credit. So that's the trend in Korean economy society. And as I showed in the previous slide, and the ratio of household debt to household disposable income reached 136%. So that's much more one can take. And also in macro level, and household debt per capita reached 74% of GDP per capita. And for international comparison, and according to OECD statistics, and OECD statistic also includes the financial debt of non-profit organizations. So this is then the second line of definition. Okay, so not the first line of definition that I'm using. So according to OECD statistic, and the ratio of Korean household debt to disposable income is 150%. And whereas, so 150% is then the 11 percentage point increase from 139 in 2007. So from 2007 to 2010, within 3 years, and then this ratio rose 11 percentage points, and which is the highest level among OECD countries. Okay. So we have some other numbers for international comparison. And then, well, all in all, and then because of all these facts and then the concerns, and as of April 22nd, and then BOK, Bank of Korea Governor Kim Chung-soo, and then when he made a report to Korean National Assembly, and quote unquote, and then he remarked that the nation's household debt reached a limit. So this is kind of the remark from a specialist. And the BOK is the agency that collects household debt, and he should know about this issue much deeper level. So also, and this is then the growth rates of a CPI, personal disposable income, and household debt. So while the growth rate of the personal disposable income has been greater than that of a CPI, so which is good, and at least people are making more than the inflation since 2000, and the growth rate of household debt has exceeded that of personal disposable income, and since 2005, so presenting evidence of households' economic hardship. So the good news is that, and then people are making more than inflation rate, which is good, but the debt is rising faster than their income, which is not good. So this causes another concern. But here is a good news, and there are several the attempts to defend the status of Korea's household debt. So some people think it's a big problem. Some people think, no, it's not a big problem. And this is the defending argument. So take a look at this. And this is the share of debt holding households, average debt, and share of total debt by income quintiles. So quintile is the equal share of 5. So top 20%, bottom 20%. So that's top 20%, that's bottom 20%. So, and who has more debts? Top 20%, and they have the 80% of the top 20% have some kind of debts, whereas only the 32% of the bottom 20% incur debts. So as long as people have ability to service their debts, and the debts may not be such a big problem, okay? And I borrow money and to go to college, but I have an ability to pay when I have a good job. Then in this case, well, I'm just taking a loan and for future benefit. So as long as I can service the debt, and it's not going to be such a big problem. So the line of defense is that, and because these people have ability to pay, and it may not be such a big problem as described by public opinion. So, and I wanted to show this because there is other line of thoughts. So now, and this is the direct translation from a slide that I saw in KDI, and which was used on the KDI economist Kang Dong-soo. And so in words, what that means is when people incur huge debts, and also Korea is such a small country, and it's very dependent on foreign trade, and also it has security problem, as you know. So international the economic shock or exogenous shocks are very important to Korean economy. So in combination of this, and there can be some negative impact on the labor market, and also this can raise interest rates. And also, when housing market is not doing well, and asset price may decline. So all in all, in combination, and the household debt burden may rise. So when that happens, many things will occur. So all in all, negative impact on consumption, and also negative impact on investment because the saving declines. Saving is the source for investment. And worsening financial companies when people declare bankruptcy and the outstanding loan will not be collected. So and all these things will happen. And all in all, and acceleration in the economic growth will slow down. So which is a big problem. So let me just go over this one by one. So the household debt in Korea will affect the Korean economy in the following ways. So first, and the rising household debt will reduce the savings and investment. So that's a big problem, okay? So people incur too much debt, and then saving will go down, and the saving is the backbone of investment. Without investment, there will be no capital accumulation, and economic growth will stagnate immediately. And Korea is known for its economic growth. The only way Korea survives as a small country is the maintaining economic growth. So long-term impact is very serious, okay? So second, as the household debt rises, private consumption and demand in the housing market will decline. And the housing market, so I'm going to talk about housing market pretty soon, but when housing market declines, asset price goes down, and many people will get panic, and in panic situation, people will do unwise things. So, well, economic growth or social stability, I think, is based on the how people perceive about future. So when I see that, when I believe that, and the future is very uncertain, and then in that case, I become very present-oriented. So I don't think this is a good news. So third, the mounting household debt may lead to insolvency when debtors are unable to repay. So they are all related. So in that case, at some point, the weakest link will get broken anyway. So some financial companies will get bankrupt, which happened, okay? And 저축은행, savings bank, and they were out of market, couple of semesters ago. And also, the rising household debt can be transferred to government debt. And this is a possibility, but very likely possibility. So when people are placed in a dire economic situation, they may need government assistance. And also, government may not ignore this kind of situation because there is a public responsibility, and also all the politicians, and they want to get reelected. So they will do something, and the money will come from government fund. So there is a very the likely possibility that the household debt issue will be transferred to government debt. Fifth, when the household debt is rising, has reached the critical level, government may not be able to use the interest rate monetary policy to stabilize the economy. So so this is just the one implication. And I spent already 25 minutes, so I want to cover all this quickly. So savings, and a major consequence of Korea's rising household debt is the decline in household saving. So let me just give a brief summary. Korea's household saving rate was pretty high, over 20%, and before 1997, so for the Asian the financial crisis. But over 20%, this is respectable level, and this dropped to mere 2.7% in 2011. And there are reasons for that. So this level is only half of the average household saving rate, which is 5.3% of OECD average. And the US average is 4.2%. So this sudden decline of Korea's household saving is comparable to some of the cases in New Zealand, which is 2.3%, and Japan, 2.9%. And this is what happened. And the average household saving rate in Korea from 2000 to 2010 was 4.7%, which is better than 2.3%. But this is less than one-fourth of average saving rate from the previous decade, which was almost 20%. And after these two episodes, so from 1998 to 2002, so during these 4 years, and the saving rate dropped from 21.6% to 0.4%. So 0.4% is really the low number. It's almost nothing. So in that case, and then the generous social contribution made people feel happier. So they began to think that, no matter what, they can always fall back on something, and then they expand the consumption. So this is what happened. And from 2002 to 2008, and then household saving rate dropped from 8.4% to 5.8%. So reason is a little bit different in this case. And one of the major reasons is the low interest rate. And then this encouraged the real estate speculation. So the banking sector charges low interest rate, so people began to borrow more money from the banks and the financial institution, and to make money from the real estate market. But overall, and another two reasons are slower growth through labor share and aging population. So the labor share and from the productivity is becoming smaller and smaller. So that's why people have people make less than before, so that they no longer have as much ability to save. So that's a problem, and also aging population. So you may know a Korean labor market these days, and not many people can sustain over 50 in their regular job, and some people get fired or lose their job in their 40s. So when people live up to 80 years, and there's a huge the problem, the financial burden. So aging population is one of the reasons, very important reason, why Korea is struggling in terms of saving and consumption, and also household debt. So why did household debt in Korea rise? So accommodative monetary policy. So which means that, and after Asian financial crisis in 1997, and that the biggest the policy task was the revitalized economy, and in the presence of recession, and fiscal policy may be necessary, but another line of policy is the expanded monetary policy to lower the interest rate and then stimulate the economy. So when I say accommodative, so accommodation is the increased money supply, lower the interest rate to stimulate the economy. So this low interest rate, the policy, the platform was rampant in late 1990s and early 2000s. So this caused the stimulated people to borrow money from the bank, and this is one of the big reasons of the rise of household debt in Korea. And also lending practice for financial sectors. And usually the banking sector used to make the credit line to firms, but after Asian crisis, and many firms became risk averse. Okay, they saw things, so they became really risk averse, and the banking the institutions shifted their the lending practice from firms to household. Okay, so people think it's easier to borrow money from the banks. They actually borrow a lot of money. And so booming real estate market is another reason, and untimely policy response of regulating authorities. So this fourth factor, untimely policy responses of regulating authorities, will be discussed later, and along with loan-to-value ratio and debt-to-income ratio. And also expansion of a real estate ownership of baby boomers born between 1955 and 1963. So according to statistics, and 20% of the Korean population belong to this age group, okay, 1955 and 1963. And they are kind of in the backbone of Korean economy. So when they reach the level, and then they wanted to own a real estate or own a housing, and then this caused the increase in household debt. So, reasons for the rising Korean household debt. So policy change. So this is the accommodative monetary policy I just explained. So second, and the Korean government at the end of 1997 adopted the policy, encouraged the use of credit cards to stimulate the consumption and to save, to stimulate the economy from consumption side. Well, in macroeconomics, we talk about national economy as a sum of four components: consumption, investment, government purchase, and net export. And consumption, you may think of consumption as individual, so it may be only 10% of national economy. But consumption, there are so many people. So in a national economy, consumption share is a lot. In the US, it's approximately 65% or so. So stimulating consumption is very important. So this was the policy from Korean government. So in order to stimulate consumption, and then government relaxed the rule on credit card issuance, the requirement policy. So that was successful initially, but eventually caused the credit card crisis in 2003. So third, and artificially created low interest rates, so which was covered already. And the fourth, and after the 1997 financial crisis and the Korean financial institution, even at the time, and without having appropriate risk management system, and not very the up to date or state of the art the risk assessment system, and then they made some mistake in lending loans. So this also caused the household debt increase. And also, I think this realty invincibility notion was the big culprit for the rise of the household debt increase in Korea. And ever since I was a kid in Korea, and I never heard about the house price goes down. And according to statistics that I found, it's not included here. And from, where is it? Okay, here. And from 1975 to 1995, so that's a long time ago, and the real estate price, not just in the housing price, the overall real estate price in Seoul increased 33 times. Okay, and also, from 2005 to 2012, and then the housing price in Seoul, the apartment housing price in Seoul, and rose significantly. I forgot the number. I wrote it down somewhere. But so this instill a certain notion on people's mind, and that when you own a piece of land, when you own a piece of a property, you will never lose. So this caused the realty invincibility notion, and people were willing to borrow a lot of money. So anyway, and as a result of this, and the banking sector mortgage loan balance rose significantly. So financial institutions concentrated, okay, so here. So, and then this is the people's response. And now according to a report from Bank of Korea, and 34.7% of the sample households replied that the price of a real estate they owned declined. So, and the realty invincibility was people's mind until about 2 or 3 years ago, but the housing market is acting differently these days. So people have a very pessimistic idea. So second, the percentage of households that replied that the value of a real estate they owned was lower than the first number. So 24.4% replied that, and then the house price would increase. And only 5.1% for significant rise. And not surprisingly, the household debt problem is expected to exacerbate, as 58.9% of the households reply that they are having a difficulty in their daily lives due to the repayment principle. So when housing price is going up, and they can always make money, and then selling the household, pay all the debt, they still have money, so which is good. But then this is no longer the case. So people are very afraid. And in order to address the problem, and then the current government, Park Geun-hye administration, released the two policies to stimulate the housing market. April 1st, housing market, the reform, it's not a reform policy, and also April 30th amendment, so which we covered after this. So non-banking financial institution is also problematic. And then people with bad credits or low credit ratings are unable to borrow money from the regular banking system. So regular banking system, the commercial banks, famous banks, and the big name banks, and they give they give out a loan at a relatively in good terms. So probably and 5% interest rate or so. But if I have a bad credit, if I have history of the delaying my payment, delinquency, and I am not welcomed by these banks, so I have to go to the second level. Second level is savings banks, which is under loose control by government, and they charge really, really high interest rate, sometimes as much as 40%. I couldn't believe this, but charging 40% was legal at some point. So, and when people are borrowing money and from the second line of a banking system or secondary banking system, and then this causes lots of trouble. So, in the first place, I'm in a bad shape because I don't have credibility. So, because of the weak financial situation, and I borrow money from the secondary banking system, and then this will exert and even heavier pressure on my financial responsibility. So, a 2012 the service report, and as the banks shifted their lending practice to those with collaterals categorized as lower risk assets, and the share of loans extended to borrowers with low credit ratings, and the credit rating are below category 7, and declined from 14.5% to 11.4%. And also, and this report also showed that the share of low-income class in taking loans from the non-banking sector. Non-banking sector is in the secondary banking sector, savings banks, and a mutual trust fund, and rose from 43% to 47%. So this is the changing dynamics. So as I said in the first, and then the household debt level is important, very problematic, but the nature is also problematic. So the lower income class are burdened with the debts usually borrowed from the secondary banking system, not the first line of the primary banking system. So let me just skip this. So now let's talk about loan-to-value ratio and debt-to-income ratio. So loan-to-value ratio, as I defined, is if I take a loan, and if loan-to-value ratio is 50%, and then, the value, my asset price is the $100,000, for example, and then I will be able to take a loan up to 50% of that. So loan-to-value ratio is somewhere between 0 and 1 in terms of a ratio, and if loan-to-value ratio is lower and lower, that's very conservative. So in Korea, loan-to-value ratio is approximately 60% and 40%. And in the US, loan-to-value ratio is much higher. Even 80% of loan-to-value ratio in the US is regarded as low. And in UK, that's as much as 125%. And also, debt-to-income ratio is the ability to incur debts based on my income level. So if debt-to-income ratio is no, it's not ability to pay that with respect to my income. So if I make $10,000 a month, and I pay the $6,000 for principal and interest, and my debt-to-income ratio is at 0.6. So the LTV ratio is the most effective policy tool, and that the Financial Regulation Authority can use to manage risk associated with the fluctuation in the value of a real estate. But here the problem is, and in Korea, there is this special lending system. It's not a lending system, but the renting system, which is called the jeonse. And the jeonse is a system or some kind of deposit where substantial deposit is required to lease a property. So overall, on average, the whole Korea, and jeonse, the deposit level is approximately 55%. 55% of household, the property value. And in Seoul, and the picture is a little bit different. And Seoul is a metropolitan as you know, and many people want to live in Seoul. And also, a certain district of Seoul is famous for their good school district. So, in some part of Seoul, the jeonse deposit is almost 85% of the price of the property. So, which is kind of ridiculous, but that's what happens. Then again, and how do you translate? How do you treat this jeonse? So, if I pay, for example, 85% of the asset price and to send my kids to nicer school, and will that be a debt? Should it be considered as a debt? Well, if this money comes from my own saving, it's not a debt because I saved a lot, so that's how I pay this 85%. But in order to pay 85% to send my kids to better school, I take out a loan from bank and pay it. Then in that case, it's a debt. But the household credit as defined does not include this debt. So if we include the jeonse deposit as a part of the household debt, and the household debt will be minimum 40% greater than what I presented. Okay, so this is also a huge problem. So the current policy in Seoul metropolitan area, including the city of Incheon and the Gyeonggi province, and the LTV ratio is 50% on houses of a price lower than 600 million won, and 60% on others. And 80% of the LTV is regarded as low in the US. And also, DTR ratio in Korea is approximately 50% in Seoul and 60% in Seoul metropolitan area. Okay, so having this kind of problem, and what is being done by the Korean government? So there are many policies implemented by Korean governments. The previous Lee Myung-bak government, and even before that, and the Roh Moo-hyung government did many things. So, for example, DTI policy was implemented in Roh Moo-hyung government between 2003 and 2008. Okay, so let me just describe a couple of relatively recent policy and one big the policy which is being implemented right now. So the first one is the comprehensive measures to induce soft landing for household debts. So in Korea, and that's 가계부채 연착륙 종합대책, and which was implemented in June 2011. And here, and also there are several characteristics in the debt structure in Korea. And one is most of the loans are the loans with the variable interest rates. So which is not good. And if an economy goes into a certain situation and the interest rate rises, and then the debtors will pay even more than they originally assumed. So this put debtors and them in a very weak position, very the uncertain position. So as of June 2011, and a more fixed interest loans and adjustment of repayment period was introduced. And also, as well, about a year and a half ago, and in 2012 of February, and the supplementary rules for non-banking household loan activities. In Korean, 제2금융권 가계대출 보완대책. So second policy is the supplementary to the first one. So regulating non-banking lending institutions, so mutual savings, banks, insurance companies, and also loan-to-deposit ratio for mutual savings banks was fixed at 80%. So which means that mutual savings banks is kind of restrained, okay, not to overextend the loans. So now, and this is a big issue, and the National Happiness Fund is the election pledge by the presidential candidate Park Geun-hye, and who is the president of the Republic of Korea. And so this is in Korean the definition 국민행복기금, and this is a form of debt relief fund. And President Park pledged that, and she will create this fund with 18 trillion won, approximately $17 billion US, and to ease the debt burden of the low-income class. And in particular, 3.22 million people who are unable to service their debts. So this fund was actually launched on March 29, so which is pretty recent. And let me just invite your attention to this press release. So this press release is from the Financial Service Commission. So overview, this is National Happiness Fund, and this is to restructuring debt and easing debt servicing burden on student loans and converting high interest loans and lower interest ones. And I have some details from the press release by the Financial Service Commission. But we don't have enough time, so let me just go over what I prepared. So, National Happiness Fund was launched on March 2013, and the application is being accepted from April 1st to December 31st. And this is a really generous the very generous debt relief policy. So it gives debtors more time to repay their loans and reduce their interest rates for a limited time. And so there are many details, but let me just describe it too. So first, in particular, loans with interest in excess of 20%. So as I said, the secondary banking system charged exorbitant interest rates. So in some cases, so debtors were charged more than 20%. So that kind of loans were targeted to reduce their rates to 10% range for loans taken out from financial institutions in the secondary banking system. And also, those who had been diligently paying off debts for the 6 months leading to end of February 13, and may be entitled to this debt relief program with a maximum loan amount of 40 million won. So that's generous too. And also, I want to go over, here. So this part, benefits. This part. So one of the benefits is that up to 50% of a debt can be written off depending on the applicant's age, period of overdue payments, income, and the repayment schedule can be extended by up to 10 years. So that's very generous. Well, it's not for everybody. It's for certain persons, certain people, and who have multiple debts. And by definition, multiple debts is having debts from minimum 3 banking institutions. Okay. So, and this is one of the example of the implementing ambitious the policies to address household debt problem in Korea. But now, problems. So people already see problems. Well, this is really the generous and very the ambitious plan. But this plan can create a moral hazard, of course. Well, when I know that, and I will be excused at some time, well, because this happened in the before, and this can create a moral hazard as government will help the borrower repay their debts. And also, funding source is pretty small. And even though the funding is based on 18 trillion won, and the source is pretty small, and in comparison with the size of that. And also, some people argue that the National Happiness Fund is a form of a political populism. Well, and the President Park was inaugurated in March. And this is probably the first economic policy because she was busy dealing with the North Korean issue. So we haven't seen any this significant economic policy. But now, and the Korean economy is stagnating, and the KDI and adjusted its target of economic growth and from 3.0 to 2.6, which is also projected by OECD. So 2.6 is pretty low. So some people argue that this debt relief is a form of political populism and threaten the market order, and it creates conflicts among debtors who have sincerely tried to pay their debts. So it's simply unfair. And some people even argue that, and then why do you bother to apply for National Happiness Fund? Okay, and if I just declare bankruptcy, and I'll be happier because all my debts will be written off. So people actually think the efficacy. So is it better than the declaring bankruptcy? Well, so there are lines of the opposing ideas about this, and also individuals who are classified as a basic livelihood security recipients. So in Korean, this is 기초수급 생활 대상자. Okay, so they are living the bare minimum. And to eke out a bare existence from day to day, rarely have the ability to repay. So even after 70% of the debt were written off, okay, and people who belong to this category still have trouble to pay 30%. So it's good, it's much better than nothing, but still, paying debt is a hard problem. And also there are so many the problems pointed out. And a long redemption period of 10 years is also problematic because, and according to the details, and even if a person is eligible for this and they get benefits, And even after 9 years of compliance, that person just missed the 1 year, and that person will be responsible for the whole thing. So, which is pretty hard. So, people think while the National Happiness Fund is a good intention, its intention is very good. But this fund is not the fundamental solution to the household debt, and it aims to ease the household debt, probably temporarily. So, in that sense, the National Happiness Fund should be understood in light of Social Security, okay, for temporary the purpose and rehabilitation, rather than credit amnesty or the long-term solution. So this is not a long-term solution. And we will wait to see, because the application period is from the April 1st to December 31st. So we will see next year and then see if this is working. This would work. So we'll take a look. And also, there are many the policies done to revitalize the real estate market. So real estate market was to be stimulated by two policies: April 1 real estate measure, and also April 30th amendment to the tax reduction and exemption court. So let me just introduce one information. So exempts the transfer income tax for newly built housing units for a household under the value of 600 million won. So that's about $500,000. It's not a small money in the U.S. housing market, but in Korea there are many places over this. So 600 million won is Yugok won. Yugok won is approximately the $550,000. So, or less than 85 square meters, and acquired from April to December if the unit is to be transferred within 5 years of acquisition. So proponents, and this amendment is desperate measure to normalize real estate market. So we have to do this to destabilize the market. But opponents, and this bill is inconsistent. And the bill favors smaller housing units, and that meets space requirements. But outside of Seoul, and there are slightly bigger the units that badly needed this protection. But because of this, the square meter, the space requirements, and sometimes the target is kind of misplaced. So now, and the recommendation. So I think, so personally I believe that, and the household debt was generated from financial sector. Okay, so this is a money matter. So from financial sector, accommodative monetary policy. But in order to cure, in order to address, in order to treat this problem, I think the solution should be found in the more fundamental sector of Korean economy. So first, job creation should be considered, especially for the least privileged. So as we saw in one slide, and if we have an ability to service debt, and having debt is less of a problem. But the problem comes from the low-income class, and even after treating them with the 70% writing off their debt, and they still don't have money. So job creation, I think, should be considered, especially for the least privileged. So create decent jobs and a better employment security, employment training programs. Well, I know it's easy to say, and getting it done is really hard. So one of the major policy from current Park Geun-hye administration is the creating new jobs. And I think, and this requires the social consensus. So unless one is willing to sacrifice himself, herself, to share what they have to less fortunate people, and that this is not going to happen. So this requires the deeper, what do you call it? Deeper the reasoning or understanding. So it should be much deeper than financial matter. And also the workers in the non-regular sector, 비정규직, and this is not just a temporary job. It may be a full-time job, but it doesn't have a full benefits, or it's a term employment. And they also need special assistance in finding employment. So as I introduced earlier, and despite this low unemployment rate, which is 3%, and then the quality of the job is not very laudatory, okay? And we have lots of people who are working for very short time appointment. So, and that this should be addressed at some point. So second, and the policy attention for both debtors and lenders. And for debtors, more financially supportive policies such as microfinance and petty loans for the low-income classes are needed, and within the range that does not create or minimize moral hazard. And also, what is important is when I make a living day by day, and probably I belong to low the educated class, and I may not be able to understand all the procedures for National Happiness Fund, even if this is available. So there's got to be some kind of counseling system, and for me to understand and what it is about. So I know this is good for me, but because of my lack of information and I'm financially illiterate, so I may not understand all the complicate the details of this kind of policy. So I strongly believe that, and opening more branches dealing with those loans and offering extended business hours and disseminating the loan application information and more effectively, and such as setting up call center for credit management and counseling are recommended. And all in all, and then so to monitor how successful any policy would be, and I think finally, and all these programs must be monitored and data should be collected to see if these programs are actually working. So this is my presentation, and thanks for listening. And I will be happy to share my idea with you, and I'll be enlightened. Thank you very much.
Great, thank you, Dr. Kim. That was a great presentation, lots of information there. So we have a microphone. So if you have questions for Dr. Kim on some of the thoughts and issues that we have going on here, we have a microphone for you. You can ask a question, state your name and your organization, ask a question for Dr. Kim. Yeah, right here.
Garrett Redfield, U.S. Korea Institute. I had a clarification question on Park Geun-hye's NHF. Does it solely apply to those individuals who are getting loans through the banking system,
Yes.
or does it also apply to those going through non-banking institutions as well?
Well, as I understand, I heard the National Happiness Fund is applicable for debtors who took out loans from primary banking system. But the coverage is uncertain at this point. So let me find out. So secondary banking system actually includes non-banking, savings banks. But I think a secondary banking system is already included. But those loans taken out from loan sharks, the private, the individual, and it's not going to count.
A question over here.
Hi, my name is Sing-Tae Park, and I'm an RA from the Wilson Center. And the question I want to ask is, how do you see the developments in the Chinese economy and what's going on in Japan in terms of Abenomics? How do you see them affecting the debt problem in Korea in the short term and maybe in the long term as well?
Okay, that's a very interesting question. So is Abenomics still working?
We're not so sure about the long-term prospects.
Okay. Well, off the top of my head, Korea is very dependent on the international trade. So with China grow so fast, and Korea is being put on a weaker position as it loses edge to China. And I'm not quite sure about Abenomics, but if Abenomics is going to be working as it was intended, and then Korean currency will appreciate, and then Korea will some share in its export power. So this will obviously affect the household debt. But the link is already established because to the extent that Korean economy is heavily dependent on international trade, especially export, and those people who are working in the export share will be directly affected. And then to the extent that they are making less than before or they lose jobs even, and then consumption will decline. But whether this is big enough to affect the general the statistics in Korea is uncertain. But the link is obvious there. And I think China matter is a little bit different because Chinese economic growth has been expected for a long time. So it's not a news we just found out yesterday. So I think there will be some impact from Chinese economy. Well, the viability or the consumption or the general economic the situation in China, the link is already there. But that link between China and Korea will be weaker than the link between Japan and Korea. Okay, so if you want me to answer in terms of a number, and I don't have the number, but the link is obvious there. Yes.
When you're talking about households and with the demographic situation, with the old,
Yes.
so you have the situation where you have the grandparents and the
Yes.
parents are trying to pay for
Yes.
two parents trying to pay for four
Right.
of their four parents, the grandparents. How does that the debt that the grandparents have or the lack of money that they have kind of trickle down, and then is that collected into a family?
In Korea?
Yeah, in Korea, in the Korean situation there.
Well, I think the family structure is changing rapidly in Korea. So traditionally, in the extended family system, and the younger generations are supporting their family and are raising their children. So three generation family was common. But these days, I have seen cases where the senior citizens prefer living separately. So after retirements, and the senior citizens and rent or bought a small apartment and that live together. In that case, that's a separate household. So by definition, household debt is the summation of the debt incurred by the people who are living in the same household. So if the younger generations are living with their children, but then their parents are living in separate household, and the household statistic will be much different.
Okay.
So according to what I read, one of the concern is in terms of age distribution, the 50th, the household run by the individuals in their 50s and they incur the highest level of debt. So I'm not sure whether this will be sustained 10 years later. So when they become 60, they carry their debt. But the general trend is when people get older, and the debt burden is getting bigger and bigger. So due to the weak employment protection, and if people have the higher debt burden, but they don't have the secure employment, and the payment of debt will be very serious problem. Yes, please.
My name is Andrew Kwon. I'm an intern here at the
Yes.
Korea Economic Institute. On the point about the social ramifications of the household debt situation,
Yes.
you raised an interesting point because today I did read an article in the it was Korea Times and Korea Herald where college students today they surveyed college students and they asked them, would you be willing to be helping your parents when you receive a job? And
Yes, yes.
They've seen a dramatic drop in
Yes.
the willingness of the younger generation, of the 20s, in helping their parents overcome the debt situation. Do you think that is a positive ramification of this increasing spike in the household debt situation?
Well, I think that is describing reality pretty well. So your question was?
Yeah, I just wanted to ask if that was a repercussion, as a highlighting example of what's going on socially in terms of the household debt situation.
Yes, I think so. Yes. Yes, please.
Duan from US Korea Institute. I have a question that is, so President Park Geun-hye was talking about that she's interested in transforming Korea into more welfare state. But looking at the debt rate right now, do you think that's possible in short or long term?
Well, let me answer the question by taking an example that happened 5 years ago. So the immediate predecessor is President Lee Myung-bak, right? And when he was running for the presidency and when he was elected, and his economic platform was 747. So if you remember 747, that was the President Lee's platform. So 747, we have three numbers, and the first seven is, I don't know which seven is which, but let's say it's the same seven. So seven is the seventh largest economy. So I showed as of 2011, and the U.S. Korea's ranking in terms of the GDP, it was 15th. So it didn't happen. Okay, so it didn't happen. So four is the President Lee wanted to grow Korean economy where GDP per capita is 40,000 range. It didn't happen. And the Korean, the per person GDP was only 22,000, so which was about half of the 40,000. And the next seven, the last seven is the economy will be at a stage where annual growth is around 7%. It didn't happen. So last year it was 4%, and this year, and the KDI OECD unanimously projected to be 2.6%, and then next year, and it would be better at some points. So I don't want to downplay any political, the ambitious or the, what do you call that? So altruistic. It's not altruistic, but the ambitious economic the plan. But it's hard to achieve, really. And also, turning to your point, then what is the definition of welfare state? So welfare state is in order to appease people, in order to help out the less fortunate people, whether they belong to low-income class or they belong to older generation, not having enough money. And this is really good intended. It's very well. If we can do it, we'll be very happy. Okay, but then how do you finance that money? How do you finance that money? And I am very skeptical about this. So basically, in order to address all these problems, like the turning Korea into welfare state, or addressing household debt, or addressing income inequality, all major problems in Korean economy. And I think the answer should be found much deeper level than economics. And it may be psychology, and it may be sociology. I don't know why. I don't know where. But I spoke with Nicholas yesterday in length about this problem. And I'm a product of a Korean education. And I left Korea 1989. And I came to Johns Hopkins the fall semester of '89, and then, so it's about 25 years. And then I visited KDI for 9 weeks, and that's the longest visit for me to make during this time period. So many things changed, but still, I feel that the basic problem, lots of fundamental problem in Korea occurred because of this competition. It's a very small country. There are so many people, and the competition is really fierce. So if you lose out at one stage, and there is absolutely no second chance. So unless people have a different opinion about the definition of a success, okay, and then none of this problem will be solved. So for example, if I believe that, and the definition of success is buying a new car, and every 5 years, and being a new, whatever, and then I'll be much less willing to share my money with less fortunate people. But if I define success in a different manner, okay, and co-prosperity, and then I'll be a little bit more willing to share my money. So I'm a little skeptical. And also, it's in the first stage of this presidency, so people have no ground to attack this argument. But we'll see. Yes.
Right here first. Well, we'll go here first and then.
Yes.
Hi, I'm Robert Kaproth with the Treasury Department here in
Yes.
DC. It seems like there's a lot of saving in Korea. It's just in the corporate sector. Korea has a record current account surplus in dollar terms.
Okay.
And Japan, by the way, is another country that's had this decline in household saving rate alongside a rise in corporate savings and a current account surplus. So it seems like a lot of this comes down to labor share of income. And
Yes.
you mentioned that in your presentation. And it's a very hard thing to do to increase the labor share of income, but I wondered if you had any ideas.
Oh, that's a tough question. Okay, labor share. And well, there are two ways. Because the whole thing will be split into labor share and the capital share. And in order to raise the labor share, well, I don't know about share, but in order to raise the amount, and economic growth is the key answer. So even if the share stays the same, and to the extent that we raise the productivity or the economic growth in some way, and then the amount to allocated labor will be enhanced. But how do you raise labor share? And to answer that question, and then I think we should consider what happened to capital first. Okay, so if the capital, technology development is focused or geared to the capital or sector, and then labor share will be much smaller, even smaller than that. But the only way off the top of my head, I think of raising the labor share is the enhance human capital. In a way, the labor contribution is actually enhance the productivity. But other than that, well, I can't really think of any. Do you have any idea about how to raise the labor share?
It's no really good convincing ideas.
Right,
That's why.
I see. So what's happening in the U.S. the labor share in the United States?
I don't have that statistic in
I
mind.
see.
I think it's generally a broader trend, not
I see.
just in Asia, but globally that the labor share of income
I see.
is down and corporate savings up.
I see.
Certainly, corporate savings up in the United States.
I see.
Japan.
I see.
Korea.
And I read somewhere, and this is pretty preposterous, and I don't like this line of logic, but I heard that the long-term employment system in Korea, before Asian crisis, and the employment system is kind of long-term in Korea, and then that actually retard the labor share, because the people can contribute, and in their peak age can be in their 40s or 50s, but if a worker is in their 60s, and they may not be as productive. But the implication is the fire all these older workers. I don't like that kind of logic. Yes.
Or
My name is Tim Peters. I'm the director of a humanitarian aid organization relating to North Korea.
Thank you.
So I'm not an economic specialist, but I very much enjoyed your presentation.
Thank you so much.
And I was simply wondering, I mean, certainly the presentation was taken very much in a vacuum, but I'm wondering if you could comment on how projected continued trends, as you described, about savings, about debt, how will that impact, number one, my question is, how will that impact the attitude of the average South Korean to even consider reunification with North Korea? It would seem to me they would be less and less interested in such a proposal. I'm curious, that's my first question.
Okay. Second question is?
The second question, I guess in a way it was already asked about how would this impact the relationship between South Korea and China?
South Korea and China.
Would it make South Korea in a way more vulnerable
Yes.
to certain more aggressive policies of China towards some of its trading partners, and even possibly have some negative impact on democratic institutions, things like that? I don't know. I'm just wondering.
Okay. Yes. To me, the first question is easier. So let me take a step at the people's perception about Korean Peninsular reunification as the household debt rises. About a year ago, 2 years ago, and during President Lee's term, and his elder brother was the member in the National Assembly, and he was a strong man. And I think he suggested this idea and created this unification jar. And it's not a physical jar, but it's a symbolic kind of piggy bank so that people can save, people put on money, and to prepare the potential cost for reunification. And that idea was dismissed soon after. The reason is the people generally didn't like being imposed on financial burden. So I can answer your question from two perspectives. And the first perspective is then from household debt, and also second perspective is the different perception from younger and older generation toward reunification. So obviously, and when I encounter any kind of financial difficulty, and I don't want to be imposed any more burden. So I think household debt, the rise of household debt, will be a really bad news for reunification. Okay, and I got to take care of my family first. Then why would I care, North Koreans? Okay, so that's the first question. And second, I think the second question is more fundamental. And then suppose the household debt problem is completely addressed, so we don't have any problem. Then will that be able to, for South Koreans, will be more aggressive about North Korea unification? And I think I'm also skeptical about this because younger generations, and I don't know how to define younger generation, but when I was growing up in Korean education system, and we were kind of brainwashed about unification in a certain way. But that is much less true these days, and then people are more in a way, individualistically oriented, and the concerns about North Korea is much, much weaker. So overall, and how the rise of household debt is not a good news for reunification. And even after this problem is addressed, okay, and because of age structure and the demographic structure, well, the older people will be much older, and they don't have much stronger voice anyway. So when younger generation become older generation, and I think unification issue will face different phase, and it may happen, but the process will be much different than we expected. So that's my expectation, and that's my observation. And second question is in the presence of rising household debt, what will happen to the relationship between North Korea and China? And I think anything can happen. Anything can happen in this case. But off the top of my head, and China is a really big thing in Korea these days, and everybody wants to learn Chinese language, and so people understand the importance of China, and President Park Geun-hye is making a trip to China in about 2 weeks. I don't know when, but so the situation will be normalized much more, the improved than before. But I don't think there is any clear link between this particular aspect of household debt and people's perception or attitude toward China. And you may enlighten me, but I can't think of anything. Yes.
Well, like things you're talking about in your presentation, you showed that slide from KDI that kind of had the breakdown of things.
Yes.
So when you're looking at these more global issues that could affect South Korea's economy, so either another global financial crisis or a decrease in trade for Korea. What are some of these other global issues that you think, in particular, would impact kind of that breakdown of slide as you went down the slide, that really kind of connects those household debt?
So in the first, the row of my slide was the household debt versus international exogenous shock.
Right. So is there a particular shock that, besides just another huge global financial crisis, is there a particular smaller shock or incident that might kind of trigger some of that breakdown that we had in the slide?
Well, 1997 Asian financial crisis, and before that, and Korean the financial system was much weaker in the sense that, and it didn't have the appropriate the risk management appraisal the skill, but they learned a good lesson in that, and also from the IMF recommendation, and Korean economy structured in a way, and it is less prone to that kind of financial shock. So it learned a very good lesson. But if I name a couple of the potential shocks to Korean economies, then again, going back to the earlier points, and because Korea is such a small country and it doesn't have much natural resources, so any kind of the upheaval in the international market in oil or the national or natural resources, and that can dismantle, that can destabilize Korean economy. It may not destabilize, but it may put Korean economy in a different phase. So I think the price, the resource market in the international market is the most important.
Yeah, great. Well, I think with no other questions, I think this was a great conversation. I know it's a big, heavy topic, but as you can see, it's an important one, and we appreciate you, Dr. Kim, coming in and talking to us about this. So join me in thanking Dr. Kim.
Yes.